shout out to public.com for sponsoring the stream. It's a platform built for serious investors with stocks, options, crypto, bonds, plus AI tools. And they're offering an uncapped 1% match when you transfer your portfolio. Check them out at public.com/wolf. Investing involves risk, and this is not investment advice. All right, guys. A lot. The day was like, okay, everything's doing okay today. You know, the market's rallying. Maybe it's digesting what happened yesterday with the Nvidia GTC event, $1 trillion in revenue by 2027, end of 2027. And I don't know what happened in the last 30 minutes, but I decided let's kick off this stream early and let's just get right into it. Well, the first thing we're going to start talking about is a little bit of an update on the war. Not really much is happening other than Trump just saying a bunch of stuff, promising things that, well, we don't even know if it's going to happen or not. We'll see. And then we're going to talk about, of course, the Muddy Waters short report on SoFi. This just came out like about less than an hour ago. And SoFi, what's SoFi trading at right now? I think it's down like 5% still, maybe. Let me check this one out real quick. Yeah, SoFi is down pretty decent amount. We're going to get a little bit into that. I got the report open over here, so we're going to take a look at it. It's down about 2% today, so it actually did have a little bit of a recovery since it did have its fall. TTD is down like 6% today after a firm has been telling its clients that it will not recommend TTD anymore, or the trade desk anymore. On top of that, we have day 2 of the Nvidia GTC event. We got a little bit more news as far as more in the 1 trillion revenue, but also they're going to be doing half of their free cash flow on buybacks. So we're going to take a little bit more on that. And this morning, like I said in yesterday's stream, over and over and over again, many streams ago too, is that, look, you saw a $6 billion dilution event with IREN. Nebius is going to have another one, and we, of course, got that this morning as soon as the very next day when I called it was going to happen yesterday. And the stock is down about 10%. I honestly don't know why this is of any surprise whatsoever. We're actually going to compare both of these dilutive events and see which one's worse, which one's better. In my opinion, this is a very high capex business, and this probably won't be the last round of investment of dilution we're going to see. But the Nebius one is a little bit different from the IREN one. So we're going to take a look at that one. And finally, we're going to take a look at some charts here with the Photonics sell-off. A lot of these Photonics stocks, AAOI, Coherent, LITE, they're all selling off pretty handsomely in the last couple of days. But arguably, they're still up a lot throughout the entire year so far. So let's see where AAOI is at. Yeah, AAOI is at $87. LITE is at, I saw it recover today. Yeah, actually, LITE is green. So it's just AAOI that's down. LITE and Coherent, we did recover most of their losses today. So we'll go ahead and take a look at that one. But something that I noticed that was pretty interesting this morning was that you had the IGV software ETF up a lot today, SOX down, and now they're kind of both flipping today. I think they're both about up about even on the day. But anyways, thoughts on rumor price action? Yeah, I'll get a little bit into that. Yeah, really appreciate the shirt. Shout out to Nebius. This was not a $3.75 billion shirt. It is merely a cheap shirt that they sent me. So not a cheap shirt, a good shirt that they sent me. And I mean, I like it. I like black. It's one of my favorite colors for a shirt. I like the color. I like the color scheme that Nebius has. Anyways, guys, let's get right into it. We got some news yesterday, and Trump did have a little bit of a press release this morning. Let me go ahead and play this clip for you. Actually, I got 2 clips to play for you. One of them is from CNBC. The other one is from, I forget which news channel it is, but let me go ahead and play this real quick. This one is the short one. Just Trump makes some commentary on the China summit that's supposed to happen soon.
Still plan to travel to Beijing at the end of this year?
I don't know. We're working on that right now. We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship, but because of the war, there's no tricks to it either. It's not like, oh, gee, I'm waiting. It's very simple. We got a war going on. I think it's important that I be here. You know? So it could be that we delayed a little bit. Not much.
All right. So in addition to that, there was another press release where he did give a little bit more details on the war. I mean, he's just getting asked about the war left and right. I honestly don't think the market is too concerned about China right now. And clearly Trump is not so concerned about China right now. The spotlight is definitely on the war to see as far as how this is going to affect oil prices. Now, I said yesterday that over the weekend, we did get escalation of the war, but we ended up closing down on oil, which was actually very interesting to see, being that in previous times, oil would have a rapid price increase and appreciation after you'd see more escalation. But after this weekend's escalation, we're starting to see oil prices subside. I did talk about this more than a few times in the last couple of weeks, but yesterday was very noticeable in that one. So let me go ahead and play this other clip as well from Trump. This one's a little bit longer. It's a couple minutes long. So let's go ahead and check this out.
Progress have you made, Mr. President, in getting America's allies to assist the U.S. in escorting those oil tankers through the Strait of Hormuz?
Well, we don't need too much help, and we don't need any help, actually. In fact, we just put out a notice. I was watching over the last couple of weeks, and all of our NATO allies were very much in favor of what we did. They thought it was very important. We were just discussing it, actually. Very important that we take out the nuclear threat from Iran, and we've done that very strongly, very powerfully. We've wiped out their Navy, wiped out their military in every aspect. Their Air Force is now decimated. They have no Air Force, no Navy. They have no radar. Their radar is entirely gone. Their anti-aircraft machinery is gone. Everything is gone. Their leaders are gone. I guess one of their top person was, they say, a lot of people say their actual top was killed yesterday, along with somebody else who was responsible for the killing. The man that was responsible for the killing of 32,000 people over the last 2 weeks, he was in charge of the killing of protesters. It's an evil group. I mean, they've killed much more than 32,000 people. And the man who was responsible for that was also killed yesterday. And all of the NATO allies agreed with us, but they don't want to, despite the fact that we help them so much. We have thousands of soldiers in different countries all over the world, and they don't want to help us, which is amazing. I mean, amazing. And I didn't do a full court press because I think if I did, they probably would be. But we don't need help. That war has been long prosecuted, as far as I'm concerned, almost from day one. We knocked out many of these things. We knocked out the Navy essentially in a couple of days. But I was surprised to see that NATO, while they agreed that it was a very important thing to do, they agree fully. Nobody said, oh, you shouldn't do it. They would have had a nuclear weapon within 1 month of when we had the B-2 bombers bomb the nuclear potential. I call it the nuclear dust. So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there.
So this is it's pretty interesting how the war is starting to develop. You're starting to see certain countries kind of not want to be involved in the war. And personally, I don't. Obviously, there's some disagreements as far as like how much militia each country should be sending, or warships they should be sending toward the Strait. But arguably, the Strait of Hormuz is one of the most critical trade paths for a lot of these shipments to be carried out across the entire world. I mean, if you don't have the oil tankers going there in massive scale, it's going to affect oil prices. But I think the market is kind of forward-looking in this case, where they kind of have a good hint that the war is going to eventually pass, and they're no longer fearful that we're going to see continued further escalations. But even if we do, I think we saw most of the escalations or the surprise escalations in the past. The market's kind of expecting that at this point. The market does, it is forward looking. It does trade upon certain events that are come up and how they directly impact the stocks that are traded in the stock market. And I guess at this point, if we already have saw the massive escalations already happen and already saw those price shocks hit the oil markets, then maybe it's not as bad as we feared. It's always it's not as bad as we feared, or the uncertainty becomes certainty is what starts to bring less volatility in the stock market. Let's actually bring up some charts over here real quick, and then we're going to go move on to the next segment. If we take a look at the VIX here, the VIX is pretty much getting crushed over here, continuing to make lower lows and lower highs. So as we start to get this compression in VIX, it is overall bullish for the stock market, because that means it's going to be less hedging and less volatility in the markets. And it's quite possible that we might start to see the S&P kind of float up a little bit more. We've obviously been very resilient, even in the midst of having a VIX at 35, where SPY only got as low as 661, but overnight it hit the 200-day moving average. So since then, we've kind of been floating upward. We did have a little bit of a pullback yesterday after Nvidia did release this news. We're going to talk a little bit more about Nvidia. We're going to watch a segment from Jensen Huang's interview with Jim Cramer, and also going to share some other news that I took from the GTC today while all of our other friends are over there reporting on the ground. Other things that did come up during the GTC event, but it's obviously a lot of news, and the market is definitely excited about it, which is the reason why we're seeing this bounce. The question is, how do we see the market react to this after the GTC event? Is everything going to be good, or is everything so bullish that it's actually bearish? That's actually where I came up with the title from, because that's the way the market sees it, is that you have news that is so bullish that it's actually bearish when you think about it, or when the market thinks about it, for that matter. $1 trillion revenue for Nvidia by 2027. What does that mean? That means more spending. And the market isn't exactly bullish when it comes to the amount of CapEx that these mega caps are spending. But again, this is not a lifetime expense that's going to continue happening every single year. At a certain point, it's going to slow down. And from the news that we've seen other CEOs say, is that this will translate into revenue soon. And as Jensen Huang has always said, compute equals revenue. But it is never going to be a straight line up. Okay, so that's one thing we got to remember. All right, let me actually just want to check something real quick. Where's SoFi trading at over here? All right, SoFi is only down like 1%, but we're going to take a look at that Muddy Waters short report real quick after we check out this interview with Jensen Huang and Jim Cramer. And I thought it was pretty funny. It's like, wait, Jim Cramer is bullish now? Because yesterday he got very bullish on Nebius. And look what happened today. Nebius is still down. Nebius is down 12% now. It's down more. I would like Nebius to come more down in price, because I would like to add to this position. But, I mean, you know, maybe we might not get the opportunity that we hopefully should be getting if the markets do stay bullish. So we will take a look at that one. In the meantime, let me go ahead and play this clip from Jensen Huang and CEO of Nvidia and Jim Cramer. So, let me open this one over here.
Slightly lower today as the chip giant kicks off day 2 of its GTC conference in San Jose. Joining us this morning in a CNBC exclusive is NVIDIA's founder and CEO, Jensen Huang, with our Jim Cramer. Hey, Jim.
Well, thank you, Carl. Jensen, I do want to point out, someone said to me the stock's down 30 cents. Your stock's up 22,000% in the last decade. Should we care about the last half hour?
Well, I guess we all do. You know, our growth is accelerating at a larger scale. That's surprising for people. And the end markets are really growing. You know, we've reached this point in AI called the inflection of inference. And so we've reached the inference inflection. And so, you know, our growth is accelerating. We would love to see everybody enjoy it.
Well, people got a little trapped by the 500 billion to a trillion, and I like that, over 2025, 2027. What trapped me was that when you said, when we were talking around Michael Dell yesterday, that Jim, do you remember when I told you that ChatGPT could be big? And I said, well, yeah, I do, 10 years ago. And he goes, NemoClaw. He said, NemoClaw, this may be even bigger. I start my morning with NemoClaw. Could you explain to people why this may be what we're thinking about over the next 5 years and not something involving margins over the last 5 minutes?
Well, first of all, I said at the keynote, and I referenced a number I used previously because I want to give everybody a baseline.
We need that.
And so last year I said that about this point that we had $500 billion of high confidence visibility of Blackwell and Rubin. That's it. Obviously our company sells other things.
Right.
We have, CPUs, we have storage processors, we have networking, and so we have all kinds of things that we sell in addition to that. We have $500 billion worth of visibility, and at this point, with another 21 more months to go to the end of 2027, we already have high confidence visibility of $1 trillion plus of Blackwell and Rubin. Not anything else, just Blackwell and Rubin. And so, we still have 21 more months of new orders coming in. Right. We still have all of the other things that NVIDIA sells. And so I just wanted to give everybody a baseline. The ecosystem needs to know directionally where NVIDIA is going. Now, of course, we plan with the supply chain. We help everybody with their capacity building. We prepare all the technology partners so that we can support $1 trillion worth of Blackwell and Rubin. And so it's an incredible thing.
You bought Grok in December.
Yeah.
What I heard yesterday, maybe my biggest takeaway, was that it's already going to be making you not money, but a huge amount of money, and that's not part of the trillion.
No. Yeah, we started production of Grok version 3. It's a really, really special company, and we're going to add Grok, not to every part. Vera Rubin is so incredible that it's really hard to add value to Vera Rubin. That engine is so incredible. And so, but there's some part of the workload, I think about 25% of the workload, where we could add Grok to it. And so for 25% of the workload, we could increase our opportunity even more. And so
people will be paying for this.
Isn't it wild to not only see that they're announcing $1 trillion in revenue, but also on that, Amit is boots on the ground at the Nvidia GTC. Not only did they give the $1 trillion guide yesterday for 2027, but Jensen Huang said the $1 trillion only included Blackwell and Rubin. It does not include Grok. It does not include storage, Bluefield CPUs. It does not include Vera Rubin, Feynman, and more. It will likely be more than $1 trillion with everything put together. That is astronomical when you really think about this. Like I don't know why the market is selling off Nvidia after its explosive GTC keynote yesterday, and even after the event unravels, where you're hearing more and more bullish stuff in partnerships. It's not even just Nvidia that is declaring higher revenue. In fact, we also had, let's see here. Let me just bring up the tweet over here. Yeah. So I'm going to share. Oh, I'm already sharing it. We also had Amazon CEO Andy Jassy say that AI is expected to double AWS revenue and sales to $600 billion by 2036. Oh, that's 10 years ago. That's so far away. It's like, okay, well, that's still a large amount for the largest hyperscale in the entire world. Yeah, okay, fine. They're not growing as much as NVIDIA, but $600 billion by 2036. This isn't a company that's selling GPUs. This is a company that's selling cloud services across the entire platform. Also, in addition to that, their Bedrock and AI models that they do outsource to other companies, and they do also build their own in-house one as well. But if you have the largest hyperscaler saying they're going to be able to expand revenue $600 billion within the next 10 years, what do you think is going to happen to Google GCP or Google Cloud? What do you think is going to happen to Microsoft Azure? What do you think is going to happen to Oracle and all these other companies? Compute equals revenue. Okay. And now this revenue, or the compute, is starting to be translated into revenue for other companies that don't actually sell the compute solely. So it's going to benefit everyone because the demand is so insatiably high. The issue is that today the market is worried about all the spending. So when they hear about the good news of NVIDIA getting $1 trillion, the market's like, oh, $1 trillion, that's a lot of money for NVIDIA. And it's even better news because it doesn't include all these other products. So that means it's even more than $1 trillion by end of next year. The way the market's looking at that is that means there's more spending. That means less free cash flow from all these mega caps. That means that a lot of these companies are actually going to start losing money and start to cut more headcount, which is going to increase the unemployment index, which is going to also increase a lot of other things, and also going to decrease the amount of spending. The economy is going to slow down. This is the way the market's looking at it. They're looking at it in the short term. If the market was so forward looking, like years or a decade in advance, the market wouldn't go down. Well, albeit it still kind of is not going down anyway, but it would be at all-time highs every single day if the market really was that far forward looking. The market doesn't look past more than a couple months, guys, or even a couple weeks. If it really did, then we would never drop. So anyways, that is my take on the Nvidia GTC event. There, of course, were a lot more announcements that did happen today, but that was probably the most important one that I wanted to discuss. And obviously, the event still goes on for a couple more days, but there will be a lot more information and news that we do get. And there's likely going to be one last thing that Jensen Wong is going to close us with at the end of the entire conference. But still, this is probably one of the most bullish conferences that we've seen to date. And it's not really a good time to be short in the stock market when you have a conference like this happening, which is the reason why I closed my hedges on Friday, which was good timing because we did bounce pretty considerably, even after seeing oil basically peak out on Sunday evening. So let's move on to the next segment, the one that you all have been waiting for. Let's talk a little bit about Muddy Waters. Now, the background on the Muddy Waters SoFi short report is that they're basically saying there's a lot of financial engineering going on and SoFi is actually not as profitable as it is. There's obviously a lot more in the report. We're actually going to go through the report a little bit. I didn't read the entire thing. I was just kind of skimming through parts of it, ChatGPTing part of the report. I mean, come on, like what else are you supposed to do? I can't read this entire thing in like 30 minutes, but trying to get the gist of it, right? Do I think the report has any validity? Well, I don't know. I don't own SoFi. I don't know how much validity is, but I do know that Muddy Waters has shorted many companies. And when they released their short report, they're already positioned for the short position. They could have bought puts. They could be short in the stock, whatever it is. And when you get that massive 5% move down, it's very likely, and they may or may not do it, but they don't have to disclose when they're selling their short position or when they're covering the short position. So they could have already done it. They could have already covered their shorts. And the same thing happened with Apple 11 when they had their short report. Apple 11 went all the way down to $200. And as you can see, Apple 11's around $500 today and went up as much as $600-700 a couple months ago. They don't stay short the entire time. They release the report after they make their money and they usually get out. That's how these short companies work. They release the article, especially a company as big as Muddy Waters. And if you guys are actually a fan of the Compounded Friends, Muddy Waters actually did go on one of those podcasts. That was actually a really good podcast. And they disclosed that they are still short TTD. But could they really be? Or are they still short in full size? Or are they only short one share? Who knows, guys? It's really tough to say exactly what their position to do it because they don't necessarily have to disclose their exact position or alert us when they cover their short or whatever it is. It's most likely they open their short up, they release the report, and then they see it drop and they cover the majority of their short, and maybe they leave a little bit on just to see if it goes further down. That's how I would work if I was trading this position. But clearly, there's a lot of people who are bullish SoFi. So there's a lot of arguments back and forth here. But if I take a look at the short report, some things that I did take away from it is that mostly it's a financial engineering treadmill. Actually, let me bring up the short report over here. Yeah, so we're not going to go over this entire short report. This thing is like 28 pages long. But if you look at the top over here, they're basically saying the reported EBITDA for SoFi is over $1 billion, but the Muddy Waters adjusted is $100 million. So they're basically saying that they are 10% of what they're actually reporting as far as EBITDA goes. If I go down over here, where's the part where they did say financial engineering treadmill? Okay, actually, my bad. That was the top. $312 million of unrecorded debt was another one over here. Okay, so they basically listed out all of their debt from the quarterly comparison from Q4 2023 to through Q3 2024. And it's a total of $312 million of unrecorded debt. So they're basically saying that they have a lot more debt in their balance sheet that they're not disclosing to a lot of shareholders. I do try to question this specifically, like, how is it that everyone has access to all this information, but Muddy Waters is able to uncover it when the market is so quick at pricing in whatever 10Qs or 10Ks that get released by the companies themselves through the SEC? this is the way the market works today, is that you have algorithms sifting through every single piece of public information that's out there. And I would assume that the market prices in most of this stuff as soon as it's released, or very close to when it's released. And that's what basically moves the price up and down in the stock, as it does price in this information. So if they already released the SEC, if they already released the 10Q and the 10Ks to the SEC, then I would assume it's already priced in. But then Muddy Waters comes out over here and they basically say that there's a lot of unreported debt over here. So in addition to that, they also say that there's constant shareholder dilution, alleges of off-balance sheet structures to disguise borrowings as revenues. True charge-off rate is around 6.1% versus the reported 6.89%. They claim losses that are hidden by selling or moving loans off balance sheet before defaults. They also argue that student loan business exists mainly to generate accounting gains, not economics. And then they claim that SoFi fund buyers, which is 80% of the loans, to artificially support valuations at sales prices. Like there's definitely a lot. It's favorable for them for the stock to go down if you're shorting the stock, to be completely honest. I need to go over this a bit more, but you guys can definitely go over this if you'd like to. I'm going to leave this in the chat in case you guys want to check it out. And by the way, guys, we are going to do the market close today. We will have time to do that. And then I'm going to cut the stream probably 15 minutes after the market close. So I likely won't be covering any earnings today. And to be honest, I don't think there's many companies that are reporting today, any big companies. You have Oakley reporting today. You have Lululemon, DocuSign, OPTT. Actually, I don't think OPTT is actually reporting. I think they already reported. Yeah, there's really not a lot reporting today. The big earnings really is tomorrow. Micron's reporting tomorrow, so I will be doing that one live most likely. And then we have FOMC tomorrow. And we have One Stop Shop, or OSS, tomorrow morning. But yeah, so I'm going to leave that. I'm going to leave that over to Steve. Steve is going to be having Jason on his stream for Technical Tuesday around 4:15 p.m. today. So I'll probably hand over the baton over to him because, guys, the show must go on. The show must go on. All right, so that is pretty much the gist of the short report over here. Again, if you guys want to go ahead and check this one out, you can go ahead and you can go to the chat where I posted the short report. But I mean, these short reports really come and go. I would say that SoFi is already down a lot. So in order to go down even further, you'd have to see probably more downward pressure on the stock market, which we're not really seeing. The Qs are up about 50 basis points, SPY is up about 30 basis points. So I don't really see that happening. All right. So the next part of the show, we're going to go a little bit over that dilutive event that Nebius did have, about 3.75 billion. Let me actually pull the press release over here real quick. Well, where's the company's actual press release? All right, Investors Hub. Let me bring this up. Here we go. Okay, so Nebius Group announces proposed private offering of 3.75 billion of convertible senior notes. Nebius, leading infrastructure company, today announced its intention to offer, subject to market and other conditions, $3.75 billion aggregate original principal amount of convertible notes. $2 billion due on 2031, 1.75 due on 2033, and an additional about $500+ million of the principal as an option. So what does this exactly mean? So I actually broke this down a little bit in a tweet that I just posted. Hold on, let me bring this up over here. All right, so I'm going to share this screen. Kind of made a nice little graphic to see in case you guys want to check that one out on my Twitter. But basically, you had IREN issue about $6 billion at the money equity offering. All right. So the convertible notes is quite different from the at the money offering. The at the money offering is basically at the price that the stock is trading at, where they're going to issue debt. Now, this is up to $6 billion for IREN. So they can actually do part now, part later, whatever it is, when the stock is lower, when the stock is higher. It's really up to them. It's at their discretion. But they did disclose they're doing up to $6 billion. Nebius is in convertible senior notes, and they don't expire for another 5 years or 7 years over here. So that is if they actually come to maturity and if they decide to exercise those options. Now, it's most likely those options will be exercised, and I think that's what the market is actually pricing today, that they will be exercised. But this is like 5 or 7 years from now. So it's possible that Nebius could be the same price it is 5 or 7 years from now, and then they'll issue the debt, or they'll convert the senior notes to actual shares, or maybe they won't. We'll see. I think that's like the big question on the table. And then more comparative things here, it's potential dilutive type of event, and it's immediate dilution. Actually, it's not immediate dilution for the IREN one, but it will be immediate when they do exercise any portion of the $6 billion. Maturity, there obviously is no maturity for the IREN one because it's an at-the-money offering. Use of proceeds, both of them are pretty much using them for data center expansion. They both have AI clouds, so it's basically the same for both of them. Strategic backing. The Meta deal, we just heard about that one, $27 billion yesterday. So it was like $12 billion and then can go up to $27 billion. And Nebius has the Microsoft deal, but they do need to fund the contract that they have with Dell in order to build out all of that capacity. Fixed upfront raise cost for capital flexibility for Nebius, flexible for IREN. Like I mentioned, IREN doesn't have to do it right now if they don't want to, but Nebius is offering those senior notes today, which they can be executed at any time. The investor reaction, yeah, they both kind of dropped as soon as the announcement was out there. IREN did drop a bit more than Nebius, but IREN was already trading below $45 when that happened, so they did drop lower. Nebius was up like 35% in the last couple of weeks. So even though that they are down about 13% today, they are still up considerably even after this event. Balance sheet impact. So this adds debt to the Nebius balance sheet. For IREN, it doesn't add debt to the balance sheet. It's just more dilutive. So in a way, they both have a similar impact, but IREN, I think their capacity, planned capacity, is significantly higher than Nebius. So that's going to cost them a lot more money. I don't believe Amit is going live today because he is at the GTC event. So I'm going to do the market close over here, and I'm going to hand over the baton to Steve afterwards. Yeah, your portfolio is in a quiet period. I mean, honestly, it kind of sucks because actually, no, they're not in a quiet period because they already had their earnings, and Anthony Noto actually did buy a lot of shares of his own company stock. So we'll see what happens with that one. But there are some other companies that didn't report yet, like One Stop Shop. Yeah, they're going to be reporting tomorrow morning. So they're obviously in a quiet period, but they are at the Nvidia GTC event. And well, Stock Talk's going to be boots on the ground for that one. So we'll be able to hear some more details about that one, hopefully. But yeah, the event is still going to go on for a little bit longer. But as far as this event goes for Nebius, I mean, you had to really expect it happening. If the stock is up 35% in the last couple of weeks, it doesn't really take much to move the stock back down, especially when you get a dilutive event. So yeah, Nebius right now is trading at $114. Let me actually share this screen over here. Yeah, so they're trading here at about $113, $114, 12% down. I mean, congratulations if you sold covered calls yesterday. I know there are a few people that are actually underwater in their covered calls, so they're probably pretty happy to see this one. We're getting a little bit of a bounce back for a lot of stocks intraday. Bitcoin continues to have relative outperformance in the stock market. Same thing with Ethereum. But again, Bitcoin is outperforming Ethereum on the short-term scale. Ethereum did run up pretty dramatically over the weekend. A lot of semiconductor stocks are coming back today. And like I mentioned earlier in the stream, you had IGV up significantly on the day. They were all the way up here around $87. And since then, they pulled back quite a good amount. Meanwhile, semiconductors are almost near the high of day. Well, maybe about less than 1% away from the high of day. But now semiconductors are outperforming IGV, which is probably the reason why you're still seeing the market stay afloat over here. So we did get that continued sell-off in software stocks, but not all software is actually selling off. If we take a look over here at ServiceNow, they're still up about 1.5% today. Cloudflare is up 2.73% today, which means that DigitalOcean is probably up. Wow, DigitalOcean is just on a tear. So DigitalOcean and Cloudflare are not necessarily pure software plays. While they do offer a cloud, which does help with a lot of inference and queries that are coming from these LLMs, they do have, I would say this is mostly an inference infrastructure play, which is the reason why you're not seeing these drop nearly as much. And DigitalOcean has probably a bit more runway than Cloudflare since it is a significantly smaller company at $7 billion. Cloudflare over here is at $75 billion. So clearly a lot more runway here. And another play on inference that I've been in is Fastly, and this is up about 5% today. And it's actually pretty interesting because this was actually down in the day in the beginning, and then it came back up. So not all software is being sold off. GitLab continues to be going on a downtrend. I don't even know what's happening here, guys. I did get out of this one, so this is very difficult to say because I was like uber bullish this stock and I was uber bullish company, but like this is literally a straight down. Like something is happening here. It's probably more of disruption fears than anything. Samsara is still holding onto its gains post earnings. Monday.com still is trading at the lows over here, but it's been basing out over here. So it probably just takes like one catalyst event for Monday.com to go up a lot. ServiceNow, like I mentioned before, this does have a pretty nice setup over here as it is still above the 9 and 21 EMA. And you did have that crossover of the 9 EMA coming over the 21 EMA. For the weekly, it needs to get back above this 9 EMA, and this stock still needs a lot of work to do. So Zeta finally is about flat on the day. It is good to see that it's not necessarily breaking down here on the weekly. On the daily chart, it is, it looks like it's coiled up. It's probably going to get some news or something soon. When you see like this consolidation here happen on the short and medium term time frames, it most likely is going to make a big move up or down. The question is, will it be up or down? We don't know. We're just gonna have to wait and see what happens with that one. I don't want to speculate exactly which direction that's going to happen in, because as bullish as I am, it can easily go down as much as it can go up in this market. So we don't know what's going to happen there. All right. So TTD. So TTD had some interesting news today. Let me actually bring up that article. Oh, I didn't share the article. Okay. I'll just bring up the tweet first. Back here. So I wonder if TTD is still down actually. So TTD was down 6% after reports that Publicis Group is informing its clients it will no longer recommend the trade desk as a demand side platform. The decision follows an audit commissioned by Publicis, which allegedly uncovered multiple violations of their master service agreement. And currently, TTD is trading at $25, down about 7% today. So this was actually pretty interesting because, look, it was very bullish that Jeff Green was buying $150 million of his stock, and the stock went all the way up after that, all the way up to $33. And now it's down over 20% since it did hit that peak, and it looks like it just closed the gap that it had after that Jeff Green announcement. So I don't know. We'll see. I am personally not long this stock. For my marketing tech, I do have Zeta. For ad tech, I'm kind of staying away from ad tech right now. It doesn't look like the whole sector is getting too much love. You have, actually, let me go ahead and share my screen and take a look at some charts here for the ad tech sector. You have AppLovin over here, kind of basing out over here, right on the 9 and 21 EMA. Magnite is still actually just gave up most of its gains from the recent bounce. Reddit is basing out over here. Probably going to have a catalyst or something coming up. TTD, of course, is down 7%. Unity is basing out down here. So like all of these ad tech companies are still trading down here. The best looking one is AppLovin. And I believe Meta, is it still red today? Yeah, it's still red today, which I don't understand. If they're laying off up to 20% of its staff, you would think that that'd be very bullish. But I guess we're going to wait to see when they actually do that, to see when the stock goes up. Otherwise, it might just be news. Who knows? Maybe they never lay off those people, but it's very likely Mark Zuckerberg is going to lay off those people. And we're seeing here Nvidia basically close red in the day, which is very interesting to see, as bullish as that event gets. In fact, all of the Mag 7 is basically flat or down, except for Amazon, which I did mention earlier that they have a $600 billion estimate by 2036. Oh, interesting. We just had a headline come out. Let's see here. Russia sharing satellite imagery drone technology with Iran. Sources say Russia seeks to prolong war. It is benefiting from militarily and economically. Interesting. That is something I did not expect to see. Another breaking piece of news over here is that Jensen Huang did say something about 40% of Taiwan chip production to the U.S. will be very difficult. Okay, so he's just providing more commentary on it. Actually, is he up there speaking right now? I do wonder if he's actually speaking of the event. But anyways, I don't want to play any of the event right now because if I do, I'm probably going to get mine turned off. I mean, kudos to Tanner, but that really sucks. Even after he got approval to stream the GTC event, they still took it down. Like I don't know. Oh, you just posted it. Thank you for posting that. I totally missed that one. Apologize. Yeah, Russia sharing satellite imagery and drone technology with IREN. Not necessarily a good thing you want to see, but I don't know. I mean, that's Wall Street Journal, so there's probably some credibility to it, but at least it's from Wall Street Journal, not some like random post by a big account. AVAV, what's AVAV doing? Okay, AVAV is up 3.5%. Yeah, so a lot of the drone stocks are making some moves today, actually, now that I think about it. So my drone play is Amprius, which is continuing to push higher today, which is really good to see. What is Ondas doing? Wow, Ondas is up 6%. You know, and even I saw Rocket Lab was up 9% today at the high of days. ASTS is at the high of days too. $97. That's wild, man. That's crazy. A lot of these stocks are moving pretty strongly here. What about Kraken and robotics? Kraken is back to $7.33. Oh, that's good. Oh, wow, they really bought that dip yesterday. That's good to see. Yeah, kudos to people who are in Kraken robotics. Lemonade is up 16% today. That was really cool to see that Lemonade is making a bit of a comeback here, back above the 50 EMA. I am no longer in Lemonade anymore. Got out at $75, but I mean, if it wants to run, so be it. I really hope it runs so anyone else who's holding it continue to make some money off of that. No, I'm not shorting Micron at this time. I did it. It was a small short that I threw on before that other earnings, and I covered it pretty quickly after the earnings with a handsome loss. But no, I'm not going to short Micron at this time. That'd be wild. Kratos is going up too. Yeah. Oh, wow. Kratos is up 6%. I guess this is probably really bullish news for Kratos has been going up the whole day. Maybe someone knew that headline was coming out. Yeah, I mean, this whole drone stuff, it doesn't look like the steam is exactly over. And anything that touches drones is doing really good. You know, I like that. I basically got a double on this thing so far, so that's good to see. Duolingo, I'm kind of surprised to see is still trading here in the $100 range. Wasn't this thing down at like $90 the other day? Yeah, it was like $90 or something. I don't know. Let me know in the chat if you're buying Duolingo, if you're buying the dip over there, if you're signing up for one-on-one mentorship for $25K. Yeah, Seagate is up. Memory stocks are up. Did not think we were going to get all-time highs in Micron and SanDisk. Actually, no, we did not get an all-time high in SanDisk yet, but we're very close to it. Looks like we're going to get an all-time high there. Someone asked me to look at LITE and Coherent. Yeah, those are doing pretty good in the day. Coherent is flat on the day. AAOI is still down on the day. You know, these charts, this is the last segment I said I was going to talk about. These last charts, so this pullback over here, it's like pulling back right to its 21 EMA. On the weekly chart, still pretty extended, guys. I mean, this is a parabolic chart. Like, these don't continue going up, and this is a massive move from its recent highs over here. Hold on. All the way from peak to trough. Wow, that's a 30% drawdown from its peak. Imagine everyone who was buying up here. That would really suck to deal with that kind of drawdown. But yeah, we're seeing a lot of upward momentum in the market. I mean, it is good to see that we floated a little bit higher from yesterday in the stock market. It was not a great close at the lows of the day yesterday, right after Nvidia announced that $1 trillion revenue. But it is good to see some of the comeback in the market. I mean, we don't really know what's going to happen yet, man. I mean, tomorrow we have FOMC happening. So I believe this is Jerome Powell's last FOMC event. Hold on, is this Jerome Powell's last FOMC? Jerome Powell's term due in the end of May. The chairman will lead. I don't think this is his last event. I think he has one more after, unless he gets let go before the next FOMC event. There's another FOMC event in May. When is that one? May 6th through 7th. So he's probably going to do one more, if anything. So I'll take a look at that one. Am I holding a long term? No, this is just a swing play. I'm not gonna hold this long term. I'm going to take profits at a certain point. This is not a core position for me. I mean, we'll see. We'll see if it is core position, but it is doing pretty well in the portfolio, helping with the drawdown, but the software drawdown is not exactly fun to be dealing with. Do I know anything about Mercado Libre? Yeah, Mercado Libre, my portfolio. It is the Amazon of Latin America minus AWS, but instead of having AWS for Mercado Libre, they have Mercado Pago. Mercado Pago is their transaction platform where they also have financial accounts, they have credit cards and so on. Basically, Mercado Pago has been running all of the back-end financial systems for Mercado Libre in the past, but similar to what Jassy did with AWS, where they're outsourcing their internal compute, Mercado Libre is now outsourcing or has been outsourcing their internal financial arm, which is Mercado Pago. And that one is actually becoming very profitable very fast. I'm planning to sell Zeta after it goes up 3 times. So I'll inform him, say, yeah, all right, cool. Go ahead and inform me. I mean, if Zeta has a 3 times I'm here, it'll probably trade around fair value, in my opinion. So we'll see what I do over there, but still holding that one. Oh, Ubiquity, dude, don't tell me. Seriously. Can't believe I didn't buy this thing. Wow. At an all-time high today. Yeah, I was supposed to buy this one when it was $100. That would have been a 7-bagger. Is what it is. Can't catch all of them. Check ESLT. ESLT. Oh, we're going to get the market close soon. Whoa, what is happening here? All right, so we have the market close coming up in about 2 minutes over here. 30-minute chart. Yeah, 1 minute. 1 minute until the market closes. So we're going to go ahead and take a look at this one. Wow, what is ELST? What aerospace and defense? That is actually a big market cap. $47 billion. That's a big move for a company of this size. Interesting. It's up 16% today. Yeah, I never heard of these companies, man, but that is a parabolic chart. Straight up. A lot of these stocks have been going up whenever they come to aerospace and defense. So we'll see. All right, 15 seconds until the market close. Got something special for you guys as soon as the market closes. This is 987654321. I don't know. I'm not too good at this stuff, but looks like the S&P 500 is closing up about 27 basis points today. The Qs is up about 50 basis points, and let's go ahead with the market close.
Stock market is now closed.
Yep. So yes, sir, Bob. The market is officially closed March 17, 2026. Was there no bell? Come on, you could have heard that bell. Yo, Circle has been on fire lately. On fire. Did have a bit of a pullback from its high of day. I did sell my Circle swing earlier today at $129. Of course, the thing runs. Of course, Circle runs. Of course, it runs after I sell it, but I mean, that was just a swing trade. You know, I do have my core positions on. I'm not trying to do anything too crazy in the market, because this thing is like, I mean, if you look at the Qs over here, guys, it's just been chop, choodle chop, right? And if you look at the SMAs, right, we rejected the 20 SMA. We were up as much as 606 on the Qs. Rejected it. Hey, maybe we come back, but now we're above the 90 EMA, which is good to see. That's actually the first close above the 90 EMA since last week, but we couldn't get above the 20 and the 21 EMA. But on the weekly chart, couldn't get back above the 21 EMA. So I don't know, guys. This is the reason why I'm not trying to be like uber bullish here, because you don't know what's going to happen here. Every time it'll try to test this, rejection, test, rejection, test, rejection, right? So it's like, we don't know what's going to happen here, so I try not to press anything too quickly. And if I do anything, I like to take the profits sooner than later and not try to hold until infinity. So we have a few earnings going on right now. We have Oklo reporting earnings. Let's see if Oklo reported already. They're up about 87 basis points. We'll see what happens with that one. Let me just throw some of these on the radar here. Oklo, Lulu, DocuSign, CLPT. OPTT, Oh, okay. So that one actually is publicly traded there. High Tide. Maybe some of you guys own High Tide or are looking for the High Tide earnings over there. So I'll post that one on for you. I'm just looking at earnings hub on the side over here. I don't really see anything else reporting. Even this morning, Monolithic. Is that Monolithic Power? No, Medical Properties Trust reported this morning. Oh, ESLT actually reported earnings this morning. So that's the reason why they're up 16%. Yeah, but we'll see what some of these earnings are. Oh, High Tide is up about 6% after hours. Let me see if I can get some of those earnings up there. All right. I don't see High Tide earnings on Twitter. Let me see if I see it in Stock Titan. Okay, so High Tide reports first quarter 2026 financial results. Record revenue exceeding $700 million annualized for the entire year. For the revenue, $178.3 million, grew 25% year over year. Gross profit, $44.4 million, grew 25% year over year in that one. Free cash flow, $2.9 million. So they are positive free cash flow. Cabana Club Canada membership, 2.58 million members, grew 47% year over year. The company generated $2.9 million of free cash flow. Okay, so that's good. That's good. And the market seems to love their, but wow, they're about 10% after hours. Congratulations for anyone holding High Tide. Why don't you put down in the chat if you're holding High Tide? Wow, very big day for you. What are you holding exactly? That's a very big day. Congratulations, June. Hey, no problem. No problem. Glad to be here. Glad to be here. Just the show's got to go on, guys. The show has to go on. And again, I'll be handing the baton over to Steve. He's going to be on with Jason in about 15 minutes. I will hand over the baton to Steve in about 10 minutes here. We don't see any other earnings coming up here. Let me take a look to see if we have anything from CNBC. Oh, you know what? I actually probably should resubscribe to YouTube TV so I can play some stuff later on. But let me see here if there's any other new videos from CNBC. OpenAI focused on enterprise. OpenAI decided to focus on enterprise as they're coming up toward their IPO push. Basically, I think they're going to do they're not going to do any more of those crazy side products that they usually do. They're just going to focus on bringing in the revenue because they want to compete with Anthropic for the most part. DocuSign is up 7% after hours. Let's go ahead and see if I can pull up some of the earnings over here. DocuSign. Anyone still use DocuSign other than like companies that are mandated to use it? I don't know why people still use DocuSign. There's so much competition out there. I don't see it on Stock Titan. Let me see if I can pull it up on their website. No, I don't see it on the website. Did anyone post it on Twitter? Yeah, Oklo earnings are still pending here. So DocuSign, fourth quarter adjusted EPS of $1.01. Estimate was 95 cents. And revenue came in at $136 million. The market expected $828 million. So that's a beat on the top and the bottom line for DocuSign. Anything about the guidance at all? Do we have anything about the guidance? I don't see anything about the guidance. Looks like Lulu is up everywhere today. Let's see what the Lulu numbers are over here. Lululemon appointed Chip Bergh, former president and chief executive officer of Levi Strauss & Co., to its board of directors, effective immediately. All right, well, board of directors. So that's not really a whole lot. All right, Lululemon Q4 revenue $3.58 billion at the high end of the $3.5 to $3.58 billion guidance. EPS $4.78, beat the guidance that they guided for at $4.76, ahead of consensus estimates at $4.76 was the midpoint of that expectation. They are basically flat after hours, so we'll see what happens with that one. I believe Oklo reported earnings as well, since that thing is moving, or it did move actually. Let's see if I can pull up their numbers here. Oklo, zero revenue, because they have no revenue. So that's expected. EPS right in the line with 18 cents. How do you get 18 cents EPS, to be honest? Let me see if I can pull up their slide deck. Do they have it available? They don't have it available. I don't see it here on their website. Yep, I don't see it. Let me see if Stock Titan has it. No, I don't have their earnings on here. I don't know how these people are getting it. I don't see how these people get it. Yeah, I got the Lululemon. Actually, Midwest, I'm doing it in my channel too as well. So you can go to the Wolf one or my channel if you'd like to. There's obviously a lot more content on the Wolf channel. So as long as everyone's aware of that one, go ahead and check it out. I was going to buy Lulu calls, but held off. Well, it's a good thing you didn't, because the thing is basically flat and you would have lost a lot of money on the premium that you would have purchased. All right. So I don't really see anything for Oklo on here. The stock did make a move after hours for a minute. I hate how it does that. Let me go ahead and fix this. No, I didn't really make a move after hours. It's just kind of flat. So maybe they didn't release theirs yet. Lululemon is down about 2% after hours. DocuSign did give up most of its gains, but it's still up 4%. ClearPoint Neuro is down 3% today. Wasn't this thing down a lot before, and then they had the announcement? Yeah, I mean, it hasn't really moved a lot since then. Great. Hold on. Got a notification my wife didn't lock the car. That's great to see. All right. Jensen Huang actually did just make a statement here. Let me see if I could pull it up. I did see Evan post about that one. All right. Whoa, where did it go? Where did it go? All right. Jensen Huang says he expects to have more NVIDIA employees in a decade, not less. Jensen Huang says he envisions 10 years having 70,000 NVIDIA employees, and NVIDIA will be busier than ever. Currently, NVIDIA has 40K employees. That's crazy. That's crazy. Yeah, it looks like these guys are in like a private NVIDIA event, which is really cool. Oh, wow. Amit got to ask a question to Jensen Huang. Let me go ahead and play this for you guys real quick.
Hi, Jensen. Thanks for taking my question. My name is Amit. I'm a retail investor. The market has really started to question the value proposition for legacy software companies over the past few months. And with the rise of agentic workflows, many people think these platforms can be vibe-coded away. I'm curious how you see AI working with those software companies to prove that they will be valuable for your stuff.
Yeah. And so please tell the retail investors they're just absolutely wrong. And it's not even my business to protect, you know. But right is right and wrong is wrong. Let's just use one example. Synopsys, okay, or Cadence, or any of the design tools. The limit of their business is butts on seats. There are only so many engineers. If there were more engineers, they license more tools. If there were more plumbers, you get to sell more tools. If there were more carpenters, you would sell more tools. You know, and so if there were more engineers, then you could sell more tools. But in the future, we're going to have agentic engineers. And what are the agentic engineers going to do? Manifest transistors? No. The agentic engineers are going to use the same tools we use, because when we're done with using the tool, it needs to put it back into the structured data that I can understand. Because if I can't understand it, and I can't control it, this is back to the controllability questions we keep coming back to. Is SQL gonna die because agents are here? No, SQL's, that's where our ground truth of business is gonna be stored. And when the agents are done with their work, please put the work back into SQL. so that if I want to go interrogate it, I can go interrogate it. When the agent's done with design, it's going to use synopsis and cadence, and it's going to go back into the file systems and the data structures, the ground truth of the design of cadence and synopsis. And if I want to reproduce it exactly, not probabilistically, you know, if I had an agent, if I use AI, deep learning, to generate my chips, it's going to probably work. I can't have it probably work. I need it to have it exactly work. And so I need to have a specific ground truth. And the tools, the synopsis tools, keeps it coherent. Now, because I have agents, the number of synopsis tools that we have to license is probably going to explode.
Yeah.
Not the other way around. People have this weird idea that the AIs are going to manifest and generate the transistors from zero. Are you guys? That's like nano banana. I'm going to, you know, they kind of imagine NVIDIA engineers going nano banana, you know. And by the way, I love nano banana. Nano banana is great. But you can't design chips that way. Are you guys following me? You got to get it crafted layer by layer by layer, because you need it to be verifiable, you need it to be understandable, you need to be repeatable, controllable. All of those things, you can't be probabilistic.
Yeah, so he's obviously not bearish software. My take is that I think this is a new tool in the tool belt, right? So when computers first came out, people were fearful that computers going to take their job. When the typewriter came out, people thought typewriters going to take their job. When the internet came out, people thought the same thing. They're fearful. It's basically the same thing with this one, except this is happening at a very fast scale, right? So it's a bit different from the build that you've had with previous iterations of technology. This one is happening very quickly. So of course, when something happens very quickly and people are uncertain about the future, they get a little bit fearful. And seeing all of these layoffs certainly doesn't help the situation, but I don't think the layoffs are happening as a result of these companies not wanting engineers, not needing engineers anymore because AI is replacing them. I think it's because of you had a massive amount of hiring back in 2020, 2021. And a lot of these companies are reducing all the gloat in their company. And of course, with all the CapEx and everything, they're cutting some fat, whatever it is. But some of these companies, they have a lot of people that were employed in them that were just dead weight. So if you're getting rid of those people and you're encouraging the new ones or the good engineers to work a bit harder by utilizing AI, that makes the company better at the end of the day. So my take is that if you don't know how to use AI, learn how to use it in your job. Learn how to use it in your real world, your family, your financials, whatever it is. Just use it as much as possible, because this is here to stay and it's only going to get better, and it's going to progressively get about a bit stronger and improve itself in a very short period of time. So the iterations of learning how to use it is happening very quickly. Short cycles on improvements. So I would say keep trying to figure out different ways to apply it to your life. I always figure out different ways to apply it, and I use it with basically everything that I'm doing all the time, whether that's work, my personal life, or the work that I create online, whatever it is. I use it all the time. It's never going to replace what I do. It won't. There's a certain capability of humans or in ourselves we do at our job that AI can't do. You can always ask the AI to do something for you. You can ask an agent to file your taxes or to respond to a bunch of people, whether it gets something in a workflow, or you can ask an agent to maybe run certain process and application, but it's never going to make these high-level decisions on how to move forward or what to do with certain things. Like there's always going to be errors. There's always going to be facilitations and iterations of deployment and improvements on anything. And that's what we're there to do. So instead of writing out all this code manually, we can vibe code it, or we can write it out or with the assistance of AI to produce that code faster. But if you produce code faster, that means that other people who are using it are demanding more features faster, which means that you have to iterate on that code at a faster pace. And that is what AI is helping us do, iterate at a faster pace. So what Jens is trying to say is that as you increase the speed, it doesn't replace people. It just increases the expectation on how fast people will move. And that's what the tool is. And that is like a cascading event. The faster you go, the faster you do things, the faster you deploy things, and the faster the expectation is that you deploy those fixes or those improvements on top of that. It's basically like saying that when an EV came out, people thought all gas cars were going to be gone. And in fact, we heard a lot of assumptions that they're all going to be gone by 2030. And that's clearly not going to happen. They're still going to be around. But when the EVs came out about 15 years ago, when Tesla released the Model S, it has gotten significantly better since then. And the demand has only grown to get these EVs out there. Maybe not with Tesla, but with EVs in general. The demand has grown. It will continue to grow. So it's not going to replace anything. The only stipulation is that you had software stocks trading at very high multiples, and what was once 8 times EV to price to sales for the next 12 months was very cheap. Now it's not as cheap anymore. Now that's more fair value. So if that happens, maybe you won't get your ServiceNow back at $200. Maybe the norm is going to be $140 for ServiceNow, right? So a lot of people who are expecting that premium to come back, maybe that premium is no longer justified to be able to give that much premium when there's so much uncertainty on the table, when they can't forecast the rapid amount of growth they were able to forecast before. And maybe it makes more sense to invest in other companies that are free cash flow positive, that are GAAP profitable, which is the reason why a lot of the software companies you see that are out there that have been trailing along with free cash flow positive, but still not profitable on the bottom line, that they're not doing as well as the ones who are, right? So maybe that's the certain thing that we need to look at. Take a closer look at what software companies have been getting that massive premium that no longer deserve it anymore. That is what I believe the market's doing. So not all of the software companies are going to survive. Not all the jobs will still be there, but they will be replaced by new jobs that require people to have this new skill set of using agentic AI. And the software companies that won't be able to sustain their growth because they're not profitable anymore will be replaced by other companies that are able to sustain their growth and able to expand the bottom line, the top line, right? Those are the companies that are going to stick around. So it is survival of the fittest, which is how it works almost all the time. With that being said, guys, it is 1:20. Go ahead and check out Steve. He's going to be on the panel with Technical Tuesday with Jason. Recommend checking that out. I'm going to close this one out. Oklo reported their earnings today, and they reported no revenue. They missed the bottom line, but for some reason, the stock is probably going to still float higher against all odds. But I mean, Oklo down here looks a lot better at $60 than did $180. I'm not buying, though. I'm not going to be buying Oklo, sticking with good companies that are part of it. NVIDIA plan to use. Yeah, I think I posted this one earlier. 50% of free cash flows return to dividends and buybacks. All right. So, actually, someone said SoFi is up 1% after ours. Okay. So they're flat. They're flat. SoFi is flat. All right. Short report canceled. We'll see what happens with that one. TTD did close that gap, so we'll see how interesting TTD is. All right, guys. So thank you very much for watching the show. Be back on again tomorrow. Probably going to do the market close tomorrow, and probably going to do FOMC